be ordinary place. Now a solution they show face. Lady Mary they lead the way. With guess where go blow your brain. Talk your matter make we solve 'em. No judgment, just love and wisdom. We they discuss, we they learn. Every episode you go feel the burn. Oh, the chat room. Now here we they find a way. Oh, the chat room.
Oh yes.
We go talk and clear, no delay.
No delay.
Oh, it's interactive, educative, informative, and unapologetic. Oh, the chat room. We unstoppable, no be lie. You, hey, the chat room. Hey, now here we dey find a way. We the chat room. We go talk and clear, no delay, no delay. It's interactive, educative, informative, and unapologetic. Oh, the chat room. We unstoppable, no be lie. Oh, the chat room. Yeah. Now here we dey find a way. Oh, the chat room. Oh yes. We go talk and clear, no delay. No delay. It's interactive, educative, informative, and unapologetic. Oh, the chat room. We unstoppable, no be lie. You.
Hello, everyone. Good evening. Welcome to the chat room show once again. Thank you for tuning in another Sunday for an interactive, educative, and engaging conversation. We are still on the topic of financial management, money management, making sure that we are all set and have savings in place and retirement plans in place, and ultimately wealth transferring wealth to the next generation. So thank you for tuning in. If you're watching, welcome. Please make sure to share and to comment and get involved with the conversation. With that, today I'll bring Miss Lady Mary is not with us today. Maybe she will join us later. But we have Lady Christine with us.
Hi.
Christine Amuzu. Did I say it right?
Yes, you did.
Okay. We have Miss Christine Amuzu with us. And she is going to join the conversation and giving us some education on financial management and ways to keep and make more money. So I will give her the opportunity to go ahead and introduce herself.
Thank you so much, Nanaya, for giving me this opportunity to speak. Hi, everyone. My name is Christine Amuzu, a licensed financial professional, and I'm going to share with you a few tips about how, money works, how you can make it work for you, because we are in America. We need to understand the money that we are working so hard for. So if you can please share my slide with me so I can walk the audience through them. Thank you.
Okay. Yeah, he will share it in a few. All right. So basically, just as a background, what we're doing this month, we are educating our audience about being financially aware. In our community, we usually work, put our money in savings, put it in checking, and then it piles up in savings, and we think that it's actually doing something for us. But when you consider inflation, you consider the things that may happen, recession, many things happen, but a lot of people are not aware that you can have money in savings and it's getting that 0.00001%, and you're actually, based on inflation and what's going on in the economy, you're actually losing value because things will not be worth the same when it's time for you to retire. So you are at the point where you're retired, but you cannot make your earns meet. You cannot survive because the money that you think that you saved is not really enough to keep up. So I would like for people to be able to know what else they can do to be able to live comfortably once they are, once they retire. What are some things that they will need to put in place now so they can have a comfortable living, besides our regular people may have 401ks. They may, some people are probably just depending on Social Security,
Right.
which is very scary because, how can you live on Social Security? And even the 401ks that a lot of people are dependent on later on, just think about it. If you're saving like 400,000 or even 500,000 at the time of retirement, right? How long are you planning to live for that money to sustain you? So we're finding that a lot of people have to continue to work. They cannot retire completely. They have to continue to work because they did not know to manage their finances where they are comfortably retiring and enjoying their lives. So that's the background of what this month's discussion is about. So I'll go ahead and turn it over to you.
Awesome, Nanaya. You've really, really touched on most of the important financial stress that most of us goes through, right? We come to the American soil, we don't even understand how money works. We go to work, they tell us open a 401k or get this retirement plan or do this or do that. And we don't ask questions. We don't even know what our money is even doing for us. So we are walking in the system blindly. We don't even understand what's going in and out. We are paying taxes to the system. I mean, when I meet people, I said, are you working for the system or the system is working you? You understand? Most people don't even understand the fundamental of finance in America. So I'm so happy that we are going to touch on this. So if you are watching us right now, you have a book, a pen. If you don't have one, get one right now because I'm going to touch on a lot of information that you wish that you wrote them down. So please get ready because today someone's life is going to change financially. So thank you so much again for having me on. So can I share my screen? Is it okay for me?
Your screen is on.
Sorry, my slide. So
Yeah.
okay, thank you so much. Today's topic is knowing where your money goes. We are working so hard. We don't even know where our money is going, guys. You have a savings account, you have a checking account, and 401k and other retirement portfolios, but you don't even know where your money is going. You don't even know if your money is working very hard for you or if your money is just lazy. Most of you don't even understand what I just said, right? So I'm going to break things down. Today, we are all here to learn, including myself, because some of the questions you may ask can touch on a lot of things for all of us. So I'm not just here to teach you, I'm also here to learn from you. So financial awareness life experience with me today is going to be amazing. Now, tonight's journey, we are going to touch base on the money reality, what the 95% of which is majority of us are doing versus 5%, the top 5%. The 10 principles of wealth the family follow. Simple versus compound interest. I'm going to break it down with real numbers for you to understand what that means. And taxes, inflation, and social security. I'm also going to touch base on critical and chronic illness, which is the number one cause of poverty and bankruptcy in America, and also cash flow risk. I'm also going to touch base on probate court, A lot of you don't even know what probate court means, but it's happening in our community as I speak every single day. Estates, mistakes, and family banks that most people don't even know what that is, and how to take your next step with me tonight. Now, I'm going to break all of this down for you to understand. But before I do that, I need to share with you who I am and why I'm so passionate of doing what I do right now. My name again is Christina Muzu. Most of you are just joining, so you don't even know who I am. I'm an entrepreneur, mentor, and a licensed financial professional. I came to America chasing the American dream, working very, very hard. 12 hours, 16 hours. Some of you are even doing 22 hours, right? And overtime, double shifts, you have 2 or 3 jobs. That's our reality here, and you're still, and I was still broke. I was still following the system, working so hard, and I was so broke. I discovered that the problem wasn't not just about how much I earn, right? Most of you are like, oh no, I'm not making enough money. If you don't know the system, you can make a lot of money and you still be broke. Why?
Mhm.
Because you don't
Yeah.
understand the money that you're working so hard for. So the problem I realized was not how much I was earning, but how much was I keeping? And the money that I was keeping, how hard is that money working for me? Is it working overtime? Whilst banks and holidays are still going on, is my money still working hard for me? Those are the things that I realized, right? So today, I help a lot of families, and I'm going to help you on the screen right now to understand the American system, how money works, how you can take advantage of it. Okay. My mission tonight is to give you clarity and how you can change your next 30 to 40 years of your life. Some of you is going to happen right now tonight. Now, the money reality, the 95% versus the 5%. Now, I want to share with you family A, what family A are doing and what family B are doing. And then at the end of the day, you ask yourself, am I in family A or am I in family B? Right? So the family A are the middle American, about 95% of us. Most of us, we are like, oh, the rich do not pay taxes. But what we fail to understand is those with financial education end up not paying taxes, and those without it pays all the taxes. So it's not like the
Yeah.
rich, taking
Mhm.
advantage of us. No. What financial education do you have in place that is allowing you to use the system in your advantage, right? And earn decent income, but you lead pay to paycheck, paycheck to paycheck. Today, I'll ask you just one question. If today happens to be the last day that you can work in America on American soil, all the savings that you have, is it enough to take you through the rest of your life, or you is actually paycheck to paycheck? How long can you live if you stop working right now? Most of you are now thinking, right? Now, money in the bank. Most of us, we have savings and checking account, and that's the reality. I've met a lot of families in America. I've met a lot of people, and when we go through the financial check, I realized that about 85% only have savings and checking account.
Yeah.
Savings and checking account. That's it.
Mhm.
Only like about 87 has like 401k, and that's all there is. And it's so sad when I go through the financial checkup with everybody. I'm like, wow, we need to reach out to more people and give them this education for them to understand the system, right? And most people have term life. I'm going to break it down. They rent or they own a home. And sometimes I tell people whether you're renting or you own a home, it's a different level, right? You need to understand the reality, because if you own a home and you're still paying
Mhm.
mortgage, the home does not really belong to you. Miss payment for like about 3 months and see who really owned the home. That's one thing we need to understand.
Yeah, the owner will show up.
Yes, the real owner is going to show up, right? Now we have
Yeah.
credit card debt. Credit card debt. Guys, you need to understand how compound interest works, right? Because the credit card that you swipe $1,000, it takes you forever to pay, because you don't understand that whilst you're sleeping, that interest that is on your credit card is gaining interest over interest over interest. It's working 24/7, whether you're aware of it or not. That's why it takes you forever to pay that money back, right?
Yeah.
Now, most of us have 401k. I meet people, they're like, oh, I'm matching 15%. I met someone who is even matching 25%. And I broke down. I'm like, what? Are you opening yourself up to be highly taxed in the future? Or what are you doing? And most people think that the money they are contributing in there is tax free. They are going to get all their money back. They don't have to pay taxes.
Oh
Guys,
no.
that account is the tax deferred account, right? You need to understand where your money is going. Please, it's very, very important. I say if your employer is matching 6%, match 6% and use the extra to do something else that will protect your future. Very,
Yeah.
very important. So minimal tax advantages, no true plan or advisor. Most of you are just walking around, working so hard. So the question, Nanaya, sometimes I wonder is we are working so hard for the system. We are working for that dollar, but we
Mm-hmm.
don't have no plan for that dollar. Isn't that
Mm-mm.
sad?
To spend. We're
Sad.
working to spend.
We are working to spend, but not to save, right? Now, let me take you through Family B. Let's find out where you belong. The wealthy Americans, only 5%, the top 5%. They are business owners, they are investors, they own their own homes, they use permanent life insurance and index strategies, right? This topic is very, very important. How are you using your permanent life insurance? Is it an insurance that you can actually take money out like you would have from your checking or savings account, or is just a life insurance that they are waiting for you to die before they pay out? Very, very important, right? They,
Christine, hold on one moment.
uh,
So before you move on to that, let me just clarify something because we want to break it down for our viewers to understand. When you said that, if your 401k, if your employer is, let's say, matching 6%,
right.
do that 6% and then do something else with the rest. That's what you're saying because
Yeah.
just to reiterate on that part, we have I've seen a lot of people where that is like their retirement, right? That's their go-to. So whatever they feel they can contribute to that specific account, they do that, and then that's it. Everything else that comes in their hand, they spend because they are dependent on their 401k in the
That's
future.
right.
So I want to, drill that in so people understand that that's not enough. What Christine said, do 6%, you do the max to get the contribution from your employer because you want to do it where you're taking advantage of whatever your employer is matching,
Mm-hmm.
right? And then after that, you sit down, you budget, and see how much you can afford to save elsewhere,
Right.
right? That's what we're saying. How much you can afford to save elsewhere. So, what I like to do is once you have a budget, that's very important. A lot of people don't. Budget meaning your expenses, your monthly expenses, your rent, your all of your bills, right? Know how much you're paying towards that
Mm-hmm.
and try as much as you can to stay within that. That includes your grocery bills, entertainment, everything. Sit down and have a spreadsheet. If you don't know how to do a spreadsheet, write it down. See how much you get paid. See how much is going out each month. And then see how much is left. Right? If you find that after you do the your how much is coming in and your expenses, if you find that you don't have a whole lot left,
Right.
then it's time to cut back on some things. Figure out which areas you can save. Figure out which areas you don't really need, because a lot of the times we waste money on, like, if you sit down and you go through your bank statements, even credit card statement, you can see where you are spending so much in different unnecessary areas. But if you're thinking long term, you will figure out how to save those areas that you can save. Even if it's $50 a month,
Mm-hmm.
put that aside somewhere, right? And then say, what can I do? What else can I do with this money to help me be comfortable in future?
That's
We're
right.
not saying don't have a savings account. Savings account to me is an account that, in case of an emergency, you can reach easily, right? So that's your emergency fund, but that should not be everything that you have. Not all your money. All your money should not just go into savings account. So once you're comfortable and you feel like, okay, I have enough emergency fund, which is in your savings account, whatever is left is what we're talking about here.
So
That's
Nanaya, let me touch a little bit about the savings accounts that we are talking about,
okay.
because a lot of people have money sitting in the savings account, and guys, it's not helping you. Why? Just leave few amount, just like Nanaya said, is emergency,
It's a
right?
backup.
It's a backup.
Mhm.
And move your money into an index strategy account, which is also another form of a savings account. But that money is not just sitting in there like the regular savings account. That money is working hard for you 24/7. So that money is growing for you overnight. Do you understand? So that you not just depend on savings account. The rich, they don't even depend on savings account at all. They
Yes,
have a
we actually
special,
had someone here last week that also touched on the index account,
right,
but I think we didn't get to like go
into
deep
detail.
into. She told us, it's, of course, I think it's like it's a life insurance basically, right? It's a life insurance. So
It's a life insurance that comes with the index strategies.
so you can access it when you need. But
Yes.
we didn't really get to go into exactly like what it looks like, if I'm, like, first, how you set it up. Secondly, if in case of an emergency and I need to withdraw, she did say that you can withdraw, but
Right.
what is the life benefit of it if I'm withdrawing?
Right. So those are the technical aspects of the index life insurance. I have to take you through the numbers, but the basic things that you have to know about index life insurance is that you can take money out just like you would have from your checking or savings account. It comes with a living benefit protection. That means you have protected your hard income that you are working so hard for in the system. So Nanaya, let's use you as an example, right? You are working so hard. How much percentage do you pay yourself at the end of the day? When I ask people this question, they're like, but how do I pay myself? So you're paying yourself, meaning that you are taking either 10 to 20%. You're putting it down on the side into this index strategy. That's how, see it as you paying yourself. And that money also gain interest for you, right? So there's a lot of advantages that I'm going to cover whilst we're going on, right? So there's a lot that you guys are going to learn today. There's a lot of benefits that it comes with. So it's not just a life insurance, it's a life insurance that comes with an index strategies.
Okay, so let me ask a question.
Please do.
Let me ask a question. Okay, because I'm thinking if it's life insurance, it's life insurance. So it should not be something that it should not be like the first thing that we want to go to in case of an emergency. Okay, so if me right now, let me say I have my checking account, I have my retirement account, let's say 401k, I have a savings, right? Would you say that the next thing to go to will be this type of account? Okay.
1,000%.
Why is that?
1,000%.
Why is that?
Okay. So, Nanaya, let's assume that you're putting $1,000 in your savings account. That savings account gives you an interest of 0.1%, right?
Mhm.
That's all you get.
Mhm.
And that money is just sitting there doing nothing. It's like a lazy money, just there. In case you need something, which is an emergency, you go for it.
Mhm.
So now let's assume that you're using the same $1,000 into this index account. Not only have you changed the life of that $1,000, you have given it value. Why? That same $1,000 now is working so hard for you to gain interest for you. Number one, that $1,000 that you have in the index strategy is going to give you protection. What do I mean? Should in case something happens to you right now and you can't go to work, there's no money coming anywhere from anywhere. That money that you left in the index account, which is that $1,000, is going to kick in, which is the income protection to now protect you whilst you're still alive. That's the same money that is going to kick in to make sure you're paying your bills, you're paying your medical bills, you're paying all the bills that you need taken care of. Plus to
But
leave.
wouldn't there be like a cap,
Okay.
like where you
So,
to,
we
at
have
a point you're
different.
gonna exhaust that money if, let's say, you're not working, and you're
So I'm
basically
not done,
dependent
right?
on
I'm breaking it down for you. So now in the savings account, you have, in reality, you have just $1,000 sitting in there for you. But in the index, you have used $1,000 to, let's say you gain over 1 million or 2 million money account. So the worthy 5%, they buy cash. They buy cash value, right? What do I mean by cash value life insurance? How many years are you going to save to, work to save $1 million? But they know that they can use a small amount of money to buy the same $1 million. And that's where I'm taking you, right?
Okay.
So do exactly what the rich people are doing, the top 5%, the affluent are doing. Now that $1,000 is not just $1,000. That $1,000 is over $1 million plus in that index account. So when something happens to you today, let's say you start in 24 hours, something hits you and you have a $1 million cash value index. You are not only getting $1,000, you are getting up to 90%, which is almost $900,000. So now compare that to your life insurance. Which
Mhm.
one would you go in for? The one that is giving me a lifetime, cash value, a lifetime protection. When something happens to me, I rather become rich instead of the other way around. Instead of me begging on GoFundMe or family and friends, right? My story has now become different because I have that money kicking in to support me. But your $1,000
Okay, so
is just going to sit like that in the savings account. You will
which
even
sounds
end up
good.
using
It
that.
sounds good, but let me play the devil's advocate,
Please do.
because anything that sounds good, if it's too good to be true, then it's not true, right?
Right. Absolutely.
So, what is the catch?
So finally, let me tell you that it sounds too good to be true, but not everybody qualifies. It's not for everyone.
Okay.
It's not for everyone. So you can have like some illnesses, which we are going to go through, even speeding
Okay, so
tickets.
there's a screening process.
Oh, yes.
Okay.
Oh, yes. The rich people don't want you to have the account. There's a lot of things that you have to go through before you are even protected. Guys, it doesn't come cheap. Not everybody qualifies. Even your speeding, common thing like speeding ticket can disqualify you.
While
Drive
you're in it or before you get in it?
before you get in it. So if you have
Okay.
those records, some record go as far as, depending on the company. My license allows me to work with over 140 companies in America and within Canada. So depending, every company's rules are different. Some goes all the way back to 10 years life history, some 5 years. So depending on what you have in whatever records that you have can disqualify you. So I always say that this product you need it when you don't need it. By the time that you need it, you might not even qualify for it. So
Yeah.
it sounds too good to be true, but guys, it's not for everyone. I'm sorry, it's not for
Is it
everyone.
age based? Like, is it more
It's
expensive for older people than it is for younger people?
absolutely just like any other type of life insurance out there, right? It's always about the age. But most importantly, it's also about your illnesses. Like some of you go to, you don't even visit the doctor. So you don't even know what you have walking around. So it goes, you have to go through a lot before you even qualify for it. So that's why I'm so proud of this product. And my state gives me a license to talk freely about this product. You see, so most people say, that sounds too good to be true. My state will not give me a license to talk about a product that is not good, right? I have a license in the states of Virginia and over 40 other states to freely share this information with you. So trust me, it's not for everyone.
Okay.
Nanaya, go on. Yeah. Any more questions before I continue?
No, go ahead.
All right. So can you go through the next slide? Yeah. Family B. Sorry, go back. Family B. Let me conclude on family B. Yes. So they have the life strategy, which is what we just went through. They diversify their portfolio. They are debt free or low debt because whenever they also have a credit card, but when they take it, they pay it back. You see, they are strong. They have a strong tax advantages that is working in their favor. We are going to touch on that. They are guided by financial professionals, just like myself. So the question that I want to ask you on the screen right here is, are you part of the family A or you're part of the family B? I want you to answer that for your own self. Okay. Now, next slide. So anytime a successful person in America wants to part away with their hard-earned money, there are 10 financial principles that they go by. Number one, make money but never lose money. It's very, very important that all the money that you're working so hard for, you are not losing a penny of that money. Very, very important. Number two, they want to understand the simple versus compound interest. They want to make sure that all their money that they have is growing on a compound interest for them. What does that mean? Whilst they are sleeping, their money is working extra hard for them 24/7. Whether there's a bank holiday or not, the money is still working. Whether there's inflation or not, the money is still working. Whether the market is going up or down, their money is still working for them without losing a dime in that account. Unlike the 401k that you have, when the market goes down, you lose everything. Most of you, a lot, 30%, 40%, right? But they make sure that they are not in that category. They are not losing money. So financial crisis can happen any day. You guys remember 2008? Even after COVID, what happened to the market? The market closed almost about 19%. A lot of people lost their retirement portfolio. The rich people, the top 5%, the affluent, they are making sure that their money is still working for them, whether the whole world is coming to an end. That's what you need to understand too. They want to make sure too that they are not paying no middleman to handle their money for them. Do you want a financial manager to manage your money for you? Always beat inflation over the long term, which Nanaya talked about. Is your money growing for you or is just growing below inflation? Whether we like it or not, inflation in American system goes up. Now we are in a new year, 2026. The things that you bought last year, trust me, 3% is gone up. Whether you are aware of it or not, it's gone up 3%. So are you also making 3% on your money or you are making less than that 3%? So you can actually, your money can grow side by side with the economy, how the economy is growing. Whether you're aware of it or not, it's still growing 3%. Always beat inflation over a long period of time. Very, very important. And I'm going to really take my time and explain that slide. So are you paying taxes right now? Are you going to be paying taxes later? Or are you going to use the tax strategies that we have in the system to benefit you? And that's what the rich people are doing. They are putting their money in an account that they are not legally required to pay taxes. You need to understand that for yourself too. Where your money is, can you have access to it whenever you want? That's the flexibility, right? Access to cash. Can you have access to it, or you have to wait till maturity or pay a lot of penalty before you can have access to it? That's something too that I want you to think about. Is your income protected from critical and chronic illness? Let's assume something happens to you right now. How much money is going to kick in to support you whilst you're still alive? You know, the health system, when you are sick, the disability that you get from your work, minimum is 3 months, maximum is 6 months. That's all you get. After 6 months, they'll find a way to legally fire you. Because why? They don't want to pay anything. And after that 6 months, you do not have a health insurance. Everything that you're going to be paying is going to be out of pocket, guys. So how much money? You know, in American system, health care is very, very expensive. If you've not gone through critical illness or chronic illness, you do not understand how this thing works in the system, or you have not experienced a family member who has gone through this. Trust me, you don't even understand what is happening in the system. Wait till you go through it. So are you going to protect yourself before that comes, or you're going to leave your income open? You know how Social Security also works. Most people, especially most of my African communities, they think of Social Security as the one we have back home. Please, it doesn't work the same. So understand why they are taking the Social Security benefit from your paycheck before they give your money to you. Understand where that money is going, and understand it. Am I even going to get all that money back? I met few months ago. They just went on retirement. One couple, the husband just went on retirement. He was so upset. After I broke down the Social Security slide with him, he couldn't believe that he lost. He said, Christine, I've been working in the community for over 40 years as a nurse. And if I tell you how much I'm getting from Social Security, you will not believe. I might as well go back to work, right? 100%, almost 99% of us are depending on the Social Security benefit. Most of us are saying that I'm going to retire and go back home. Guys, you'll be surprised. After 2-3 years, you have to run back to the American system and go look for a job at Walmart, right? So you need to understand how Social Security is going to benefit you. You also have to plan. You know, there's something we call the estates. Please, the estates doesn't mean your home in Ghana. No. Estate means differently in American terms. You think you're going to die with your debt? No. When somebody drops dead, they take the corpse to court. That's what estate and probate court system means. So are you leaving your family with debt, or you are leaving them a legacy? Are you dying for free? Whether we like it or not, we are all going to die. And guys, by the way, if you don't pay your debt before you die, your family member, your wife or husband is going to carry on with paying the debt, or your kids are going to carry on paying the debt. This system is totally different. You die at the hospital and nobody paid your bills. Who do you expect to pay your bills at the time of your death? That's what that means. And I'm going to break it down. So please plan with a financial professional. Let them go through with you and set a plan for you that will protect you and your family. So tonight, I'll show you how to start living by these principles one at a time. I'm going to break it down. So please, next slide. Another thing, next slide, please. Do you have any question for me here? Because I know that it's a lot, but trust me, if you have a question, write it down. I'm going to touch on most of the things that I spoke about. And sometimes you might think that maybe I didn't touch on you can always chat me your questions. Nanaya, can we do that? Like type the questions?
Yeah, I'm monitoring. So
Okay.
if a question comes through, I will let you know.
Awesome. Next slide, please. Okay. So you need to name your money. Every dollar must work very hard for you. Why am I saying that? You are working so hard for this money. Some of you work overnight, overtime, 2 jobs, 3 jobs. Why are you wasting your time to work if you don't want to protect that money? Then you might as well sit at home and not even work at all. So how are you also making your money to work so hard for you, like you are working for the money, right? The last 30 days of I want you to go through the last 30 days of your bank account, your bank statement, and sort it into 3 buckets, right? And it's going to be needs, which is basic like rent, basic food, utilities, transportation, minimum debt. These are things that we live by. So you cannot live without them. I want you to sort it out into N. Like, just like Nanaya said, if you don't have a financial, plan it, write it down, write these things down, because the money goes into your account. You are the only person who knows. I don't know how much you have. And W, wants. There are things like eating out, shopping, subscription, extra entertainment that we don't really need, but we need it to entertain us, right? So find out where all those monies are going. It's something you're already doing, but you're not paying attention, right?
Yeah.
Find out how much you are paying for those things. Write it on the N column. Find out how much you are paying for eating out, shopping, subscription, extra entertainment. Write that in the W column. And the F, which is the future, which is your savings, investing, life insurance, giving back, write it down. Guys, when you break that down, the 30 days of your bank statement, and you sit down and you write it down, you will understand. This is how you are going to have your own financial, what do you call it? Screening on your own, checkup. You have to check up. You have to have a financial checkup every single month to understand, at least 6 months, to understand where your money is going. So sit down, write them down. And if your future bucket has 0, then you know this is an emergency, right? Future bucket is 0. This is a huge emergency that you need to really, really sort out. So please, it's very, very important that you work so hard. You protect the money, make that money work for you. And that's where you understand where everything is going to change for you, right? Next slide. So please do that. It's going to help you. Now, I want you to also find the leaks. Where is it going? Small leaks sink big ships, right? It might be 50 cents. It might be $1, $5. So you're not really paying attention to those monies.
Yeah.
But those are the same money that are killing you over a period of time. Subscription you don't really use. Most of you have like about 10,000 subscriptions. You don't even sit at home, guys. You work 24/7. You don't even have time to watch. So sometimes
you don't have time to watch Netflix because you're working.
No. Yes.
Meanwhile, you're paying.
Meanwhile, you're paying for it. You see, so that's where your money is going. Daily convenience is spending, like coffee, fast food, delivery fees. You see, Starbucks, one coffee is like almost $10. Every day you drink Starbucks. Take your time and do the math. $10 times 30 days times how many? 365 is how much? Then you understand where your money is actually going to. And then online shoppers, those who love to shop online, everything I have to buy. Guys, I'm not saying you shouldn't buy. I'm not saying you shouldn't spend on yourself. I'm not saying you shouldn't. But all I'm bringing to your attention is some things are unnecessary, right? If you think about it. So make sure you pay attention to your future savings plan. Make sure you pay attention to your Fs. It's going to save you over time. These things that you are buying online, they are impulses. Sometimes it's just feed our needs. Maybe we are stressed, we are lonely, we are bored. So we just go online just to shop, to make ourselves happy. Do that if that makes you happy. But whilst you're doing that, pay attention to where your money is going, right? Where your money is going. Where is my money going? Now, the interest and fees on credit cards and overdraft. Very, very important. You have a bank account, checking, say your account is always overdraft. And you pay overdraft fees. Some of you is just $30, $35, or $40. So you think that, it's not a big deal. But pay attention. Maybe in a year you've paid overdraft for how many times? 10 times, 20 times. Do the math. Understand, guys. The interest you are paying on your credit cards,
That part.
On compound interest, guys.
That's crazy.
So you are paying interest on an interest on an interest on one thing that you bought only one time.
Yeah, somebody asked me, not to interrupt, somebody asked me one time, actually I was watching a financial program and they said, there's accounts that's actually paying about 25%. And I was like, what? Where? Sign me up. They're like, no, you're paying it each month when you use that credit card. When you use that credit card, you're paying somebody 25%.
Exactly.
Mhm.
Yes. 25 to 30%. Yes.
Yep.
100%. And imagine you actually, it's like you are working for the person
Yes. You're giving 25%
of your
just
life.
to get a cup of coffee.
Yes.
Mhm.
Yes. That's very, very important. We don't pay attention to our credit cards. Well, they say we all need credit cards. Why? To build our credit. And hey, we all have to build our credit. But guys, you use it, pay it back. You use it, pay it back. So that interest will not grow for you to pay about 2-3 times the amount you use to purchase, right? That's what
Yeah.
I'm trying to bring to your attention. And that's what compound interest is. And I'm going to break it into numbers for you to really understand how it's affecting you. Now, the key question for every expense, if I lose my income right now, just like I told you, right? You lost your income. You can't go to work. You can't even do anything today. After today, you can't go to work. All the money that you're keeping, is it going to rather come in to support you, or is actually paycheck to paycheck? That's the question I ask everyone. And sometimes I even go further to ask them, what if the reason why you could not work is due to either critical illness, which is stroke, cancer, heart attack, Alzheimer's, dementia, AIDS, blindness, any of the critical illness? That's the reason why you cannot work, or you cannot perform 2 out of the 6 activities of daily living. You can't bathe by yourself. You can't bath by yourself. You can't eat by yourself. You can't go to toilet by yourself.
Yeah.
You can't walk by yourself. These things, they are serious, issues in the American system. Who should stop their work and come and sit with you and take care of you?
Right.
To shower by yourself, to bathe by yourself. How are you going to pay them? Everybody is working for that dollar, for the hours they're spending to take care of you. The same hours will give them money. So they would choose to go to work instead of coming to take care of you. So what if one of these things hits you? How are you going to survive? You see, once you see where the leaks are coming from, you can redirect your money, build your future, instead of you stressing yourself, instead of you paying, just like Nanaya said, pay somebody 25%. Let that 25% come into your pocket, guys. Let it come into your pocket. You are paying to the system. Let now the system pay you back. Next slide, please. Now, I want you to give every dollar a plan. Every single dollar that comes into your life, give it a plan. Let it have a plan, guys. You work so hard for the money. Well, maybe I don't know. I don't understand the kind of work. I don't know if you really get tired working, especially when there's snow outside. You walk through the snow with you being upset that, oh my God, I should have been sleeping on my bed, but I have to walk through that snow. Now, you, after walking through that snow, just to go and earn that dollar, won't you give it a plan, guys? Won't you give that $1 that you worked so hard for a plan, right? So now this is how we are going to assign the dollar and give it a purpose. So 10%, most people, you give back to charity, 10% of your hard-earned income, you give back to charity. And most of you that goes to church, you tithe, right? You pay tithe. So generosity, if that aligns with your faith, right? So 10% goes to those things. Now, 10 to 20%, I will focus on 20% to pay my future. Why? Your future self is very, very, very important. Guys, your future self wants you to prepare for it now, so that when you get to that future self of yours, there's a lot of protection. There's a lot of money. You don't have to stress, and you don't have to reduce the lifestyle that you have going on right now. You will live the same lifestyle and money will still be coming in for you if you plan well. That's where the wealth accounts, the index insurance comes in. Guys, people pay 20%. Sometimes I meet people, I say, what are you doing with your 20%? And they look at me like, what the hell is she talking about? Yes, what are you doing with your 20%? Is your 20% working for your future, towards your future? Do you have a future account? Please pay attention to that. Now, 60 to 70% needs lifestyle, bills, food, transportation. That's our basic lifestyle, right? It goes there. Now, the remaining fund, extra debt payments, right? So, if you have a plan for your dollar, you will live comfortably. You can still shop online and you will not be stressed. You will be okay. You just need to have a better plan for your future, okay? Plan, don't punish your future self. Make sure your money is also working for you. Your money is not punishing you, So give permission to yourself to prosper in the future so you can live on purpose, not by accident. Now, guys, I want you to pay attention. This is the number part of compound interest. This is just an interest of 10%, guys. Open your eyes. This is simple versus compound on the same 100,000 that is going to give people who are putting their money in a simple interest 10%, and people who are giving money, putting their money in a compound interest account 10%, right? The same money, but you're investing in different accounts, different portfolio. So if you see simple interest, right, it's just adding 10,000 each year on the investment you on your 10% that you are making. So for example,
sorry, it's a little hard to see. Well, at least on my end, it's a little hard to see. So
I'm going to mention the numbers so everybody can understand.
All right, go ahead.
So the 100,000, this is $100,000 that in simple interest, you're still going to get 10%. In compound interest, is still going to get yield you 10%. So I'm going to break it down, the numbers down. Now, year one, simple interest gain 10% on 100,000, which brought them to 110,000. And compound interest, the same 10%, which also gained them 110,000. Now, if you see the year two, now, simple interest 120,000, but compound interest has 121,000. Now, let me ask you this question. Why does a compound interest has $1,000 more than the simple interest? The reason is because with simple interest, your 10% is every single year, you're gaining that 10% on your principal, which is the 100,000 that you invested. It doesn't change. Every year, that's all you get. But with the compound interest, your 10%, you are getting it on the first, which is the 100,000. And you are also gaining it on the previous interest, which is the 10,000. So that's why
you're getting interest on your interest.
You are earning interest on your interest. Exactly. So that's why you see 121,000. Now, fast forward after, let's say 30 years. Compound interest gained an interest rate of 400,000. But simple made 1,744,000, guys. Just 10%. The same 100,000, but family A decided to put it in a simple interest. Family B decided to put theirs in a compound interest. And it gained them 1,744,000. I know you are asking yourself a question right now that, where do I go? Some of you don't even have as close as even a simple interest account. All you have is savings and checking account, right? Now, the other accounts, after a period of 40 years, compound interest gain, simple interest, 500,000. Now, can you compare that to 4,526,000, guys? 4 million.
For how long? Is that a 10 years?
40 years investment. 40 years.
Okay.
Yes. Compound interest.
Imagine doing this if you're 20 and you start doing this. By the time you're 60, before you retire.
Right.
That's, of course, if you have 100,000. But we all don't have to have 100,000 to start.
100%. Right. I'm just using that as the base number just to explain with everybody, right? What your money is doing for you versus what your money is not doing for you. But by the way, guys, American system run on compound interest. What do I mean by that? Now, let me break it down. You all are paying mortgage, right? You close down on a maybe $400,000 home for a period of maybe you are paying 30 years, right? $500,000. By the time you finish paying at a period of 30 years, you have paid 3-4 times the amount of the home. That's an example of compound interest.
Yeah.
Another example is our car note. You go to the lot, you're excited. Oh, I have a Mercedes, I have Lexus, I'm excited, I have myself a new car. By the time you finish a period of 5-7 years, you have paid twice the amount of the car. That is compound interest. Another example is our student loans. That's why, guys, whatever you do, please protect your kids' future so that they
Yeah.
don't go to college with a heavy student loan that they have to pay for the rest of their lives.
Mhm.
You all know, right? Obama, he was a sitting president before he finished paying his students' loans. Why? Because the interest grows on compound interest. Your child goes to college, they take a loan for 50,000. After a period of 8-9 years, they are paying every single month, but they still owe 70 or 80,000. That's compound interest for you.
Yeah.
Another example, whether you like it or not, we are all part of it, is our credit cards. You know, you get so excited. Oh, I have a credit card. You just go to the store, you're swiping. You swipe $1,000. It takes you forever to pay off. And you're complaining, well, what's going on? Because the interest that they are charging grows on compound interest.
Yeah.
So now that you are paying to the system, now that you are working so hard to pay the system, doesn't it make sense for you to also gain in your pocket too? As you are paying, you are matching side by side with the economy, right?
Yeah.
Because the system goes on compound interest. I even tell people, look, you can bring your cousins, your nieces, all your aunties, your great aunties, bring them from Ghana or any part of African country to come and work for you in the system. Give them money to you. You will still not be able to match side by side with the compound interest system.
Mm-hmm.
So now I ask you, have $10,000, $20,000 just sitting in your checking or savings account. Do you know where to go to gain a compound interest account?
Okay.
Most
So
of them don't, right?
we don't have a whole lot of time left. So
That's right.
I would say go ahead and bring it in and tie it into how somebody can get access to this index
Okay.
universal.
So I want you to run, like, in the first just 5 minutes, just run my slide quickly so that people can know, like, just take a screenshot, okay? Because the inflation, they need to know. This explains, I've explained the slide because I know that I don't have enough time. So the inflation where I talk about 3%, how it's affecting you too as well. And I'm going to sum it up, okay? So next slide. So how you can actually take tax advantages is with the indices, the interest that you make on your account and the money that you're taking from your account, you can take it tax free if you have the right type of index account. You can take it tax free. Unlike your 401k that the retirement you have to pay is a tax deferred account, you have to pay taxes later. This one, you can actually take money tax free if you plan it well. There's a way you design it that will allow you to take money tax free. Next slide too as well. So Social Security benefits and the provisional income, what they do is when you're at the time of retirement, you know, they check the person who is going on retirement, they check how much you have in your checking account, savings, 401k, all your accounts, and they add it together and they realize that at the time of retirement, you have an amount that is, say, $44,000 and up, almost up to 85% of all the Social Security that they are taking from your paycheck is going to be double tax again. That's what it is. So pay attention to this when you're going on retirement so you can move your money around in a legal way, you see, so you can get all your Social Security back. Okay, next slide. Another thing too, critical and chronic illness, the number one cause of poverty and bankruptcy. So with the index strategy account, you will have protection on your income. Money will even kick in to support you. I go to the next client. I have a friend who got protection and a lot of money came in when she was diagnosed with pancreatic cancer. Almost 480
Next slide.
84,000, right? That kicks in to support her. So this is money that will come in to protect you whilst you're alive versus somebody who didn't have it, right? Now, the estate and probate court, as I said, the money that you owe the system at the time of death, they will come for you. So you also want to leave a legacy for your family, not debt. Okay, so don't die for free. Next slide. So we have type of life insurance. We have group life, usually through work. So once you leave your job, you don't have protection. Term life is term, 10, 20, 30 years. So after 30 years, you don't have no insurance. That's why it has no cash value. So the permanent cash value life insurance, that includes the index strategy. You have coverage all the way to age 121, and it comes with all the living benefits. It's also a tax advantage growth. You can take money just like you would have from your savings or checking account. It has a lot of protection for you. Next slide. So what the wealthy family quietly do. Take a screenshot of this. So you protect your income, your legacy, build family bank over time, pass on money and wisdom instead of just debt. Very, very important. So have the cash value strategy account. Now, my story, I shared few with you, so I'm going to go back. So that's why I'm very passionate of what I do, because I realize that most of our community, they don't have plan.
Yeah.
Most people. So that's why I take delight in what I do. I go from churches, events, groups, just to give free financial education for people to understand what the American system is and how they can protect their hard-earned income. So that's what I do to protect family. Go next slide. Next slide. So ready? Finally, this is the slide. So stay here for a few minutes. Take a screenshot. If you want to reach out to me, you can send me a message or text me or email, whatever it is, and I can have a plan. I can sit down because everybody's financial issues is personal to them. So I can go through what you already have going on and I can help you plan properly. Okay. So thank you so much. Thank you so much for having me on the line. So let me take questions. Nanaya.
I can. I'm definitely. I took a screenshot. If you saw me taking a screenshot,
Yes.
because
Yes.
I'm like,
A lot of information. I know.
It's a lot of information. Let's get on it. It's very important.
Yes.
If you, especially, let me just speak to my age group. If you are in your 40s and above, you cannot just have your checking, savings, and whatever your company provides you in Social Security.
Absolutely.
That you're not going to be able to survive off of that.
Mhm.
We're going to talk about other ways, throughout this month's conversation, other ways to be able to secure your financial future. And this is one of the ways that our sister Christine is talking about, for you to have security, have the life insurance. Life insurance will provide support to your loved ones when something happens to you. One thing that we're all going to do is die. Nobody's going to live forever. I mean, it's straightforward. Not to be lousy or to scare you or anything, but we're scared to die.
Mhm.
But when you die, that responsibility falls on somebody.
Absolutely.
It falls on somebody. And the African community, we fall short transferring wealth. Okay. So with what Christine is saying, if this is an account that will give you some cash value. So in case you get to that situation where you need a little extra cash that you can't find anywhere else, then this is a place to go to. Or if you happen to be sick and you can't work, so please contact Sister Christine, get more information, secure your future. It's very important. It's sad to see people in their 70s, in their 80s still having to work because they did not do, or they did not even know.
Right.
They did not know how to secure their retirement and be able to retire comfortably. So please, I hope that you everybody that's watching took a little bit of something out of this session. And Sister Christine, thank you so much for accepting the call and talking to us today. Like I said, I have screenshot the information, so I would definitely be looking more into it and contacting you about it. and I hope everybody else that's watching will do the same. But again, next week we will be here with another financial specialist to speak to us about other retirement or other savings accounts, not just like a bank savings account, but like investments and all those other available financial resources that's out there that we are not privy to. So thank you so much for watching, everybody that's watching on Facebook, on YouTube. We thank you for always tuning in. And I don't have any questions. Seems like everybody's very attentive and listening. But if we get any questions later on, we will address it next week. If anything, if I get any information of anybody that wants to talk to you directly, Sister Christine, I will forward it to you as well. So thank you all for watching and for tuning in and for participating. We appreciate you so much. We will see you same time, same place next week. Thank you and have a good evening.
Thank you. Have a good.
Yo, yo, yo. Now your matter with the talk.
Your life, your wahala, your breakthrough, idea. Welcome to the chat room.
This no be ordinary place. Now a solution they show face. Lady Mary they lead the way. With guess where go blow your brain. Talk your matter make we solve 'em. No judgment, just love and wisdom. We they discuss, we they learn. Every episode you go feel the burn. Oh, the chat room. Now here we define the way. Oh, the chat room.
Oh yes.
We go talk and clear, no delay. No delay. Oh, it's interactive, educative, informative, and unapologetic. Oh, the chat room. We unstoppable, no be lie. You, hey, the chat room. Hey, now here we define the way. We the chat room. We go talk and clear, no delay, no delay. It's interactive, educative, informative, and unapologetic. Oh, the chat room. We unstoppable, no be lie. Oh, the chat room.